Good morning, bag builders. Welcome back to Secure the Bag with me, your host, Stephanie Beard, aka your Laker Girl, where Monday builds the bag, you guys. We are already in the month of February. It is February 2nd, 2026. January flew by. Wow. But let's go ahead. But now that you have learned how trades work, how taxes work, how orders work, how mistakes happen, today we're talking about what keeps people in the game long term. Risk management. Because making money is one skill, but keeping money is another. All right, so we got to get the disclaimer in. All right, the disclaimer is, of course, this is not financial advice. Everything is for educational and entertainment purposes only. I am not a financial advisor. Trade at your own risk. Good morning, Shirley. Trade at your own risk, okay? Um, all right, you guys. Also, too, just remember here, your bag is your freedom fund. It is your safety net. It is your future. It is your future self saying thank you, thank you. This is not. This is not. Again, this is not the financial advice. But make sure that you keep in mind that you're protecting yourself when it comes to trading. All right, let's get into it. What is risk management? It's pretty simple. Risk management is deciding how much you're willing to lose before you try to win and not after. And don't become emotional before you click buy. So just make sure the number one rule is to please. Most people ignore this rule. Never risk more than you can emotionally and financially afford to lose. Pressure money makes you panic. It makes you chase. And we don't chase here, you guys. We wait. We be patient and we become very disciplined when it comes to trading. So please makes you hold losers too long. So make sure you do not ignore those rules. Do not panic, do not chase, and you hold too long. You don't hold long too long that you know that you're not supposed to hold too long because you will lose. All right, the next slide is positioning. When you're positioning, your position sizing and how big should your trade be? So you only want to risk 1 to 2% of your account per trade. So for example, say you have $5,000 in your account. 1% risk equals $50. So you only want to risk $50. Or if you want to go up to the high point, you want to risk 2%. That's only $100. So that will make it your max loss. You don't, you feel like $50 to $100 is your max loss, and that is not your buy size. Okay. So that is the amount you're willing to lose if anything happens with that stock or that option. And why does it matter is because if you lose, you live to trade another day. And one bad trade, it doesn't end you, you guys. And then your emotions stay low and discipline stays high. So as a pro trader, you survive because they limit damage. Now in the options realm, options move faster. So we'll like again, we're not into the options yet, but if you are an option trader already, options move fast. So the smart rules is smaller position sizes, define stop loss. You got to put that stop loss, you guys, in, and no hope trades. You're not hoping that this goes up. No revenge trade saying, "Oh man, I'm gonna get back in it because I lost this." No, stay disciplined. Reward you stay when you stay disciplined, you will be rewarded and you will punish the emotional part of it. And again, like I said, stop losses are always important. It's very important when it comes to risk management. Again, you guys, remember a stop loss protects the capital, it protects your emotions, and it keeps the losses very low and very small. Not using stop loss is like driving without brakes, and that's truly very true. If you don't put that stop loss in, you could eventually lose the whole amount that you put in there. Now, when risk versus reward, just keep that up. When risk versus reward, Does the trade make sense? Before entering a trade, ask yourself, how much can I lose? How much can I make? In the healthy setup, again, risk $1 equal a potential reward of $2 or more. A bad setup, if you risk $1 and your reward is just $1, you want the odds on your side. All right. You could take that down. Now, you don't want to go broke from losing because you will go broke from losing big. Nobody blows their account from one bad trade. They blow it from one oversized trade. Risk management isn't about fear, it is about survival. And survival is how you get rich. Most people focus on how much they can make. Professionals focus on how much they can lose because if you protect your downside, your upside has time to show up. Here's the truth nobody likes to hear. You don't need to swing for the fences. You don't need to force the market. That mindset is how accounts disappear. Small losses are not failures, they are tuition. They keep you in the game, they keep you calm, and they keep you thinking clearly. So if one trade can wipe you out, you're not trading, you're gambling. And remember, we're not gambling here. And gambling has an expiration date. All right, you guys. So let's get into the market right now. The market is red. The market is red. The market, again, when it's red, it is time to shop. Don't be fearful when the market turns red. The market is red because of the news, is what is in the news. So on Friday, it was in the red, and it's continued to be that because of Trump. Trying to, Trump has elected a person to take over the Federal Reserve. And we do know that Trump wants to look good when it comes, especially when it comes to the market. If his guy does get in, which I don't know if he will or not, if he does get in, trust me, the market is going to go back up. He likes to control things, and he thinks that when he if he looks good, he always wants to look good. He always wants to be the reason why the market is up. But right now the market is down, you guys. Take advantage of it. Go shopping. I'm telling you. It is the best time to shop. Silver is all the way down. Just remember, silver was all the way up to $107, you guys. It is down to $71.61. That is a steal. That is a hell of a steal. Because silver, just think about it, if you do your research on silver, silver is needed everywhere in computer chips, everything. Silver is being used. And again, this is not financial advice. I'm just telling you what I'm doing. I love silver. Gold too, but silver is way more needed than gold. Metal precious metals are always going to stay around. It's better than the dollar. So silver now, $71.62. You cannot beat that. Put up the top 5 stocks. These are the top 5 stocks that you should be in. You should be in these top 5 stocks. Lyft is down. SoFi is down. All of these stocks are down right now. APLD. All of these stocks are down. If you are trying to build a nice portfolio for yourself, these are the stocks that are going to take you to that's going to build your portfolio. APLD right now, Applied Digital, is down only 66 cents, but it's down. Okay, that stock is slated to go to $60 before this year is up, or even higher. Then you got Lyft. Lyft could be acquired eventually by Google or Tesla. Lyft is actually back up. At the start of the market, it was down to $16. It is now at $17.19. Still a steal. This Lyft is going to be $100 stock. It's just going to take a slow, scenic route to get there, but it's going to get there. Let's go to SoFi. Now, SoFi, you guys, this is going to be the bank for all Gen Z and Gen Alpha, our grandkids and their kids. SoFi is going to be the bank for them. Like what we use today is Bank of America, Wells Fargo. This is going to be the bank for the new generation. This is where they're going to do all their banking. Right now, it's down 58 cents. It's only $22.26. By this year, this stock will be up to at least $30 to $40, if not more. It is also taking the scenic route. Then we got the Irenes. Now, Irene, this stock right here already hit $60. It is now down to, let's get back into it. Irene, let me get into it. Irene Limited, it is down to $51.04. It hit $60 a week and a half ago. It is going to go back up to $60. It is slated to go at least up to before this year is up to at least $70 to $80, but it is down $2.84 today. And see, Monday sets the standard, you guys. So Monday, you got to fill out the market. And what I do is I don't rush. When the market open, I let it see what it's going to do in that first 30 minutes to an hour, just to see what is happening with the market, just to fill it out. IONQ, you guys. IONQ is also a good stock. It is down to $38. Just last week, it was $43. It is down $1.06. So it is slated to hit $50. All of these stocks are under $50. Irene is the only one that surpassed it right now. But these are stocks under $50, and these are stocks that will build your portfolio for you. Now, again, earlier in a few episodes earlier, I did talk about the QQQ, the ETFs, the SPY. Those are bundles of stocks in one basket. SPY is a bundle of tech stocks. QQQ, I believe, is stocks of all the top stocks. It is also good to get into those, because then you know you are a part of all of the tech, all of the top techs, and all of the top stocks. So ETFs are also good to get into as well. But I'm not gonna lie, you guys, I'm down. My portfolio is down, and mainly from silver, $3,000. But no, am I worried? No. What I've done is I went back in and I purchased more, and I'm doing options trading. I have a whole a portfolio of stocks as well, but I mainly do a lot of you can take that down. I mainly do a lot of options. And I'm right now I'm not emotional, I'm not worried, because my silver options are all the way out to March 20th. So I have till March 20th for it to revive, and then as it go down, if it goes down lower than what I purchased it before, I go back in and add more. So then guess what? When it goes back up, I'm going to increase. I'm going to increase that amount. So I'm down $3,000, which is totally fine. Who is that? Good morning to you, Teresa. Hey, Carissa. Welcome. So bag builders, I want you guys to, again, if you're looking to build your stock portfolio, if you got money, again, don't risk money that you use for bills. You use money that you know that you feel like, hey, I can lose 1 to 2% of this money if that's the case. And then I want you guys to go back, because taxes are always going to be there. Taxes are not going nowhere. That's why I've been talking so much about taxes and capital gains. When you make a profit, just remember, say, for example, you make a profit of $20, you're going to be taxed on that $20. If you make a profit of $5,000, you're going to have to pay taxes. So just remember, when you make money, when you make profit, the capital gains, just remember to put money aside for that year to pay the taxes on there. But there's also other ways where you can offset. So if you do have any losses and then you have some profit, it does offset. So, and it really hits you, the taxes really hit you when you take some of the profit out and you take it out of the platform and you don't reinvest it. So make sure you guys go back to those episodes and look at all the episodes. We're already up to episode 9. We are going to be getting into options trading. I know people are saying, when you're getting into these options trading, I just want to make sure that you understand the details and the terms and what to expect when you are trading. When you are trading, you don't want any surprises, and just to keep you disciplined and patient, and just showing you how to read the platform that you may use, whether it be Webull, Robinhood, Thinkorswim, either of those, just so you know when you're in there trading that you know what each term stands for and what it means. So you want to be knowledgeable before going in and purchasing stocks. But again, those top 5 stocks, you just can't go wrong on it. And silver, silver, silver. Silver is needed. Just know that silver is going to be used almost everywhere, in all things needed, in all things used. So just don't get emotional that it's down right now. If you bought silver at $95 and now you're saying, "Oh my God, I'm down." Don't worry. Go back and buy more, because what it does is it brings down your cost, your average cost. And that's better for you, because once it hits, right now it is teetering between $71 and $73. And if you look at the candlesticks, the charts, because remember, we talked about the charts. We talked about how the buyers and the sellers control the market. The sellers are winning right now. People are selling off, and that's okay. That's okay. If you look at and I'm gonna try to show you guys how I look at the charts. See that? Those are the charts right there. Those are the candlesticks. You see all the red in there? Those are the sellers. The green, you see right there where it's blinking? That's the sellers and the buyers battling it out right now. You see it going up and down? Yeah, that is the buyers and the sellers that are battling it out right now, as okay, who's buying, who's selling. And remember the little wicks at the top. When you see the wicks at the top, that means the sellers are pushing it back down. When you see the wicks at the bottom and it keeps moving it up, that means the buyers are buying it and pushing it back up. So don't worry, the market is going to recover. The market goes up and down. Last week, remember, it was all the way up. This week is down. That's why it goes like this, up and down like a roller coaster. That's why when you as a beginner, you just want to do stocks. You just want to do stocks. Do not do options if you don't understand options. But we're going to start breaking down the options. We're going to break down the Greeks, because you got to know what everything, what drives these options. Okay, you guys? Monday is always the shortest shows for me. Um, but I just wanted to make sure Walt Disney, you guys, is also I bought Walt Disney at 50 something dollars. I just bought stocks, and it is already up to $105.29. They had a good quarter and great earnings. So that's why they're up. But at the beginning of the market at 6:30 a.m. when the market opened, it fell down almost 7%. So again, that's why you let that market show you what it's going to do in the first 30 minutes to an hour. And then also when we get into these options trading, it's always good to pick the third Friday of the month to expire for your expiration. Always the third Friday. All right, you guys, I'm going to go ahead and end this show. Thank you guys for tuning in. I really appreciate it. If you have any questions, please DM me. I do have a cheat sheet for this show. No problem, Fred. I have a cheat sheet for this show for risk management. If you want me to send you that PDF, I can do that for you guys. I just want to make sure that in 2026, you guys, that your portfolio is growing, and that you can take the vacations that you want. You could do all the things that you want and live your best life, especially at our mature age, and also build generational wealth for your kids as well, or your grandbabies. All right, y'all. Peace out. Have a great day, and we'll see you guys back here on Friday.